Hello and welcome. You're watching NDTV Profit, and today we are joined by a very special guest, Kunal Shah, who founded CRED and in a way changed the entire fintech landscape in the way the affluent class of India works, is here with us today. Kunal, thank you so much for joining us. I know we are here at an event called Yosemite, which is again a slew of announcements are to be expected. So just so that we can kick this off, can you tell us what the event has been all about?
First of all, thank you for having me and thank you for coming all the way from Bombay. We're excited about launching three things. We are launching a product that will make it extremely easy for people to manage their net worth, understand what's happening with their money. We realize that it's almost an ancient anxiety to not know what's really going on with your money, right? It's like we work so hard to create this wealth and we are always worried and anxious if it's doing well. We are kind of simplifying that across different products from stocks, equity, mutual funds, FD, gold, and so on and so forth, right? Then we are also super excited to launch a very premium, privileged private membership called a Sovereign. It's almost at the top tier membership, almost like a club that we are creating for these select few, and it will kind of create experiences and privilege that have never been experienced in India before. We are super excited. We are launching that in partnership with IndusInd Bank and RuPay A-Card network. That's the top tier network that RuPay recently announced. And the third, we are launching an IndusInd Bank co-brand card on RuPay network that we actually realized from an insight. We saw a lot of co-brands were actually forcing loyalty in a direction, right? That they will say that only use these brands and that brands. But we are living in a world of absolute freedom, right? Like there should be freedom for people to love all the brands, online, offline, and we are launching a card that gives you a benefit across all the brands online and offline and not force you to just have loyalty with a few, right? Super excited about all of these things. All comes from our rich experience of being around cards for now close to 7 years. Today, 50% of almost all credit cards in India are reminded through us to pay their bills on time, and we want to keep following the philosophy, reward good financial behavior consistently, and make the relationship with money improve with passing time and not be something that causes anxiety and fear.
Right, so a theme always emerges whenever we talk about CRED in a way. It's like it markets to a very small community of high trust and high reward clients. So a lot of people have called it somewhat of a decisive factor for the growth of the company. So what was that one, should I say insight that led you to believe that this is the market I should target rather than going for something like a mass market opportunity where growth is, unabashedly much faster and wider for any company?
Yeah, I think when we started 7 years ago, it was not so obvious. Now it's kind of become very obvious. If you look at almost every internet company and you look at the data, a small percentage of customers, I have a strong belief that almost 80-85% of all online GMV, food, quick commerce, e-commerce comes from at best 15 million customers, right? And that's something that we kind of sensed before. And that came from, obviously, I built a previous company called as Freecharge. It's funny, but Freecharge exit is almost a decade old. Freecharge came before UPI was launched, right? And Freecharge exit happened before UPI was launched. But we noticed that India, when you look at the top $3,000 per capita income, right? If you break it down by top 30 million customers, the rest of the customer will be less than $1,000 per capita income. So their needs are very different. When you're trying to build a business which is trying to solve for convenience and value of time, it's harder to build for the nation that is kind of still to increase their income and so on and so forth, right? The second obvious insight is that almost every business, if you look down, let's take an example of Bollywood, right? As mass as it gets, if you look at the revenue, it comes from maybe 5-10 million customers, right? If you look at online business, financial services, like you will notice that it comes from a concentrated behavior. And at this point of time, global companies love to come to India because it gives them hundreds of millions of customers that adds to their global story, right? So India is the MAU farm for the whole world, but Indian companies have to be focused on ARPU and not MAU. And I think therefore the strategy that we have chosen is kind of working for us.
Right, so the concept of higher ARPU again comes in. You've been very vocal about it. Mm-hmm. So for someone like CRED, how does going towards that achievability of higher ARPU work? What kind of initiatives are you taking? What kind of unit economics are you focusing on? And if I may ask, how much is the ARPU currently at?
Well, we'll talk about the financials when we'll announce our results, but I think the way to think about this is, today we believe that amongst the players who are, let's say, in other payment companies right now, our ARPU would be probably 6, 7, 8x already higher, and this is while we are still launching new products. The reason is very simple, is the audience selection. We've gone after the customer that is the most credit-worthy and the most trustworthy cohort. Every single bank, every single insurance company, every single investment company wants to appeal to the same customers, right? So CRED becomes a great platform for them to cross-sell services and products on these on the app. And what we have noticed is that if you are focused on the right set of customers, right, their income growth, their net worth, all of this kind of growing materially faster, and therefore their need for frictionless experience is even more. These customers do not want to deal with phone calls and visits and all of that. They like independence. They like to value their time a lot, right? And if you look at even today, credit card spends, right? Like when we started the journey, it was a very small amount that credit card spends. Now we are almost touching close to $300 billion. Probably as RuPay becomes more prominent and UPI spends comes to cards, we are looking at $1 trillion of spends on credit card alone, right? But will it come from hundreds of millions of customers? The answer is probably no, right? We believe that $1 trillion of spends will probably come from less than 70, 80 million customers that are actually spending. And we've also seen another interesting pattern, that the same credit card customers are the largest users of UPI as well, right? We notice on our base that customers do 25, 30, 40 transactions on UPI while they do same amount of transactions on their card as well, right? So I think we are looking at a world where focus on a customer segment and creating financial services product that will appeal to them in the most frictionless and transparent and obviously very compliant manner will kind of keep
driving the ARPU forward.
Yeah, absolutely.
Right, and again, building on, so you're talking about ARPU growth. Let's assume, so what kind of an organic versus inorganic growth factor are you factoring in over, suppose, the next 5 years? I mean, you guys have acquired Kuvera and you guys are launching a lot of things even today. A lot of products are being launched. So what's the share of organic versus inorganic growth going to be over the next 5 years?
It's hard to predict those things. I think we do not think of these percentages and make the strategy. I think we look at what is best to partner, what is best to do an M&A, what's good to build. We make these choices as the roadmap evolves. I think it will be not prudent to think about, oh, I'll be 30% inorganic and 70% organic. I don't think that's a great way of building strategy. The best way of building strategy is, are we solving the pain points? Are we doing the best customer experience? And whatever is the right choice to do both the things, do it.
So are there any M&As in the pipeline right now?
At this point of time, nothing.
Right, and I want to focus a bit on profitability. So let's look at it from an angle where there's high marketing spend and there's also the cashback for free concept that's going around with CRED. So given that you have said you want to achieve break-even EBITDA positive profitability by FY26, so
I mean, that's not what I have quoted, but I'm glad you're saying that. I would love to get there too.
Okay, then let's just keep it at that. There are media reports which say that FY26 break-even profitability is something that CRED might be targeting, if I put it better that way. So would you say that you are on path to achieve that figure?
Well, first of all, the company is only 7 years old. Many of the fintechs that have existed in the market are significantly more mature, and when we are focused on growth, you make certain choices where you kind of say, can we focus on higher user growth, higher revenue growth than trying to focus on profitability? And internet companies operate in a different manner. In an offline business or a non-tech business cannot put capital and accelerate growth, right? Internet companies can do that because you can actually acquire customers in a cheaper manner, engage them materially, and cross-sell more. Our focus has been to build a good institution and not think about timelines in 1 year, 2 years. We have a great set of investors who are supporting our vision, our journey, and we're a unique company that is solving a unique problem. And I think as we keep evolving more products, it will become quite evident that it's a good, healthy business. at this point of time, we focus on how do we kind of converge the metrics on constantly increasing our growth, reducing our burn, but not at the cost of saying that, okay, let's short circuit the roadmap of what we want to do. We want to achieve a lot of things in a very short period of time, and we'll continue to do more things about it.
So how much has, say, suppose cash burn improved in this?
When we announce the results, we'll talk about that.
Right. So you also talked about having a great set of investors, which ties into my next question. So your previous round happened, GIC again led the round, and but it was again funded by the same set of investors who are already in the company. The valuation was cut down by 45%. So is there a concern in bringing in new investors that the company is facing, or are the existing investors happy to fund growth at a reduced valuation? Like, what are the conversations going on there?
Yeah, first of all, CRED's, all the fundraisers have been done by internal investors who either came in with a small check before and then eventually doubled down and increased their ownership, right? So it doesn't come from a place of concern, it comes from a place of comfort that we don't have to constantly go out and seek new investors from the outside. When we are getting investors like GIC, they are very strong sovereign investors, probably the largest financial services investor in the country, right? We are trying to build the right kind of resilient investors that are with the company for decades, right? And we believe that these are the right set of people to work with, change the way financial service has been done, and create better experiences, right? When we are looking at capital, we are looking at what does it solve for us. Sometimes it's capital, sometimes it's building some stuff. And talking about valuation, there were different times when valuations are working a certain way. We took the proactive call to take the valuation lower for the company, not something that was done through the external market forces. We realized that if you create the right set of incentives for a lot of people to be more long-term about choices, you will keep building a large institution. And thinking in 1-2 years is not a prudent strategy for a founder. You need to think about in 10, 20, 30 years from now, where the country is growing, you're focused on the right set of customers, 40% of India's public market profits are directly or indirectly financial services. Less than 2% of today's market cap is tech, whereas in the US it's close to 27% that is tech. So when you take both of these factors together, in the right segment, keep your heads down, get the right business, get the customers to love your product, everything else will follow.
So is there any other funding round coming anytime soon?
Not that we have planned for anything.
Right. And I know we touched upon this briefly, but what are the revenue streams that you think will drive profitability? Like, if you can give me a short answer.
The answer will be no different than financial services, that all the revenue streams and profit streams that exist in the public markets, I think fintech will follow the same theme. It's just that they will try to be more efficient in delivering those services. For example, one of the themes that you will see as AI becomes more prominent across all the companies is that people will start asking what is the revenue per employee and is that growing or not, because if you need more people to keep delivering more revenue and profit, are you a tech company?
Is that a metric that CRED is tracking?
I think every company should be tracking, not just CRED. We believe that tech companies have been tracking this metric for a long time. I think it's going to become mainstream, and many other companies that are not tech will start thinking about revenue per employee as a metric now.
Right. I am being told I'm running out of time, so I'll limit myself to my last few questions. So, firstly, I want to talk about unsecured versus secured lending. You've just started a business where you'll lend out against mutual fund holdings, and you already have a very sizable, I think, 19,000 crore worth of unsecured AUM on your books. So, what's the rationale behind going for a secured lending portfolio when, in fact, your clients are very affluent and your NPA numbers are very low? So, what's the logic of?
Well, I think it's about what the consumers need, and are you creating a solid, superior experience in offering that product or not. Our business model has been simple: create the right audience, make it easy for banks, financial services, NBFCs, insurance companies to cross-sell on our platform and create the best quality experience for them, right? For both the parties who are involving in the partnership. And I think we'll continue to focus on that. Secured was just a natural extension to what the consumers are looking for. And I think we believe that eventually, if you look at any large financial institution, secured and unsecured will always have a healthy balance in nature.
Right. My last question. The Indian fintech landscape, again, at large is largely evolving, and you are at the center of any regulatory changes that might come and affect internet companies, especially fintechs, in any which way. So as CRED, do you see the regulatory environment, particularly from the RBI, shaping your future development or business in any way, strategy-wise?
I think fintechs are still at a very nascent stage. Regulation is actually the core reasons fintechs exist today. If there was no innovation through NPCI, if there was no innovation through SEBI, what they have done, fintechs would have not made it this far. I believe that as we get to a certain scale, there will be always some regulatory change, and that will have some turbulence that will happen in the early stages of these companies. But if you take a 10, 20, 30-year view, will consumers prefer to work more digitally versus physically? The answer is very obvious. Will the customers want more frictionless experience? The answer is more obvious. And will there be can you be long on India without being long on financial services? Can you be long on India without being long on credit, right? You cannot be. So I think eventually these things will converge. But I don't think that one should expect it to be always smooth sailing. It's always going to be a place where every company is trying to create trust. Regulator is also trying to create trust. And oftentimes regulation will create some changes here and there, but eventually it will eventually create more and more trust for the consumers to trust fintechs, trust tech ecosystem, and transact and live more digitally.
Right. And I know I said this was my last question, but just give me 30 seconds to ask my final question. You said FY25 financials will be disclosed soon and you'll be at length discussing them. But if I ask you, what are some pain points and what are some good things that came out of fiscal 25 for CRED in general, what would be your short answer?
The short answer is that we are doing everything that was planned.
Right. And pain points, if any?
Well, I think when you do a startup, everything is a pain point. So that is not going to change forever. I think a startup stops being a startup when their life becomes less painful.
Right. Thank you, Kunal. Thank you so much for giving us the time. Ladies and gentlemen, that was Kunal Shah from CRED with a lot of great insights about his company and the fintech landscape in India.